Hello, Warriors. Hi, Mary, AJ, Richard. How are you? Thomas, how's it going? Okay. Trade Journal. Nice to meet you. Okay, we'll
Good
talk to
morning, Dale.
Stella about it. How are you today, Kman?
Quite good, thank you.
Okay, great. I want to, we have a pretty interesting board this morning, so I want to start off with you. And I know.
By the way, I don't see your script. Oh, there you go. Never mind. Good morning.
Yeah. Good morning. Wanted to start with you with the euro. You said that tough talk by the ECB was good for 20 pips. Well, looks like it was had a little more in it than 20.
Yeah, it actually all started with the sterling this morning. Labor report was much better, and then sterling took everything in its wake. And then ECB, the Dutch guy from ECB, not dropping the 50 BP line possible in his view, took it through 105 the figure. So yeah, it's a joint effort by the sterling and the euro this morning.
Okay, what would it take since you like the action better in cable? What would it take for you to declare a bottom in cable?
I reckon. I think I had something like 126 and a bit or so.
Above these highs? Above these highs came in?
Yeah, around there. Yeah.
Okay, because that was the last failing rally.
And there was and there's a load there from prior to that as well. But
okay. I mean, this looks like a natural place for it to go on a rebound, doesn't it?
Yeah,
yeah, it was a flat bottom, and massive breakdown candle here for it to try and get back there. Similarly to the S&Ps, fighting their way back to the breakdown at 40.80 and actually coming off. Gold put in a great day yesterday after Carly was here. We had a little 3 drive down here, and silver has been stronger. Silver back at some important resistance here, but not a bad pop from last week's low. Also, the gold silver ratio sold off pretty good. So I don't know, for me, since to me, euro looked 50-50 yesterday, could have done this or could have tried to take out 103.40. I really don't have a major sell in the dollar until we take out this breakout. Okay, Blake has pointed it out with this line that we've had that go back to COVID, and then we checked it this day. So now 102.30 is still an important pivot. And look at this reading on the weekly. Really
you have like this red trend line that you had on the previous picture in this weekly. That red trend line seems to go straight to the one that's not going to the end of the page.
This one, yeah, okay.
That's gonna go straight to up into that 102 zone as well. It seems. The one there.
This one,
yeah.
Good eye. Okay, so that's off that monthly range in COVID. Yeah, so there they go.
See that?
Yeah, nice. All right, I'm glad you saw that. So there's a nice confluence, and it's in time. It's a little bit away, but yeah.
Yeah, I think and then I leave gladly the word to others. I think the time is, and I've been banging on about that. The timing could be once Fed really starts QT. I think there's going to be like the big test zone for everything. The big test, date-wise, calendar-wise, the big test for everything, in my opinion.
And that's what, June 6th or something like that?
Yeah, June, and then take it into June. Then we're going to have the ECB meeting coming up on the 9th, the next FOMC on the 15th, with revisions and team member expectations and stuff, it's going to be big. The good thing for us, it's going to remain volatile, in my opinion.
And Aussie did come off that line right here.
Serious bounce.
It's trying to go higher on the month, Blake, because this is a monthly up here. So, and the weekly looks like they could do some squeezing.
Serious bounce because the Aussie also has been helped by
China.
PBOC not moving their interest rates. Dollar CNH capped. JP Morgan yesterday calling they think it's time to move back into China. HSBC did roughly the same overnight. So CNH has been strengthening and Aussie in its slipstream. Yeah.
There's been such an exodus out of China. It's like, I tend to agree at this point,
We're only what, 630, and let's call it from the bottom to the top, 630 to 680. That's what, 8%.
Yeah.
Still reasonable, right?
Yeah, I mean, I think so.
That guy that I have on, Blake, a Dem, he's a very intelligent guy, vociferous reader. And he likes optionality and goes for contrarian trades. And I don't know, about 5 months ago, it was in the dollar before people became Super Bulls. And he was here last week, and his trade is the F.A.C.E, which is, Chinese market. It's an ETF on China. Yeah,
right.
So,
and he wanted to be long that, right?
You're right. So I haven't looked at the yuan. Is the yuan continuing? Oh, yuan's giving it back a little bit. That's a weekly on the yuan. So
yeah, I mean, you look at the F.A.C.E. I mean, actually, I just pulled it up. It's been a while since I pulled up the market here. I'll
why don't you show us?
I'll share with you guys when I'm
take over my screen like the Outer Limits did when I was a kid, and I tell you, man, it gave me anxiety attacks. It said we are now taking over your TV. I go, Mom, someone's taking over our TV.
Well, here's the F.A.C.E, and if you just kind of glance at it, there's a couple things that I see here. First of all, we're in a big range, and we're at the lower end of the range. And I mean, doomsdayers would be saying, well, here we go. The market it's actually breaking down. I mean, I don't know. I would venture to guess that you could actually say, oh, that's maybe a broadening pattern, like a megaphone pattern. Maybe it's like even a channel. I don't know if I'd get bearish down here. I kind of, if this is the time to get into China, if you really want to be like involved in China, I don't think this is a bad place, right? Even if it's just for a tactical bounce, to take us back to the 200-week moving average up here at 4,100. I mean, I look at it and it's hard to be bearish down here. I don't like selling in the hole, and that definitely would be selling in the hole. But a lot of people are very bearish equities globally, and they think that we're going to have some sort of crash or come down. And I'm obviously I'm not in that camp. So, I'm wondering. Hell, I'm wondering how we act around here around the 4,100 level. As I was telling everybody in our general chat room over at ForexAnalytix, this is the
squeeze them, Blake.
What's that?
I think they're going to squeeze them so hard their eyeballs will be popping.
Yeah, I mean, this is the bull bear line for the market, right? I mean, it's really at 4,100, and I don't know if we're going to break today, but I wouldn't want to be on the. I don't think I'd want to be on the short side right now. What do you think, Kman? I know Ryan's here too. He probably wants to say his piece, but what do you think, Kman?
Yeah. Can I just add to finish on the CNH that I've moved
about the CNH. Let me pull up the single currency really quick.
I've moved out of my CNH short positions yesterday and during your overnight. Anyway,
so you were long.
681 and between 681 and 677, I moved out of my longs dollar CNH versus my short dollar MEX. So I'm just keeping a small short dollar MEX for me.
And just so everybody knows, I've been pretty bearish the dollar MEX, and but we're probing the 20 level, which I think is going to be kind of a big pivot this morning. Anyway,
that was the question yesterday, right, Blake? What would you want to have on during risk on? And we have risk on today. That's for sure.
Yeah, we do. And look at, that was the question yesterday, right? Yeah. The question I posed to everybody is, what would you trade? And look, Ryan said the Aussie, and the Aussie's up 60 pips. I said the Mexican peso's strengthened a little bit, not as much as the Aussie though. I mean, I have to hand it to the guy with no hair. I mean, Ryan, I'm sorry. Are you here, by the way? But I didn't even hear you. I knew I could get you out of your hole.
You have to narrow that down, the person with the bald hair. There's several candidates.
I know. I got to be more specific. Well, let's just say that Stelios is still on some sort of a boat, catamaran or something on the Aegean Sea. So I can only talk to you the one. Well, no, there's Kman's here too. So dang, man.
Or Stel. What he has to go through.
And they still have hair.
Yeah. So Ryan, what do you think? I mean, you called it great with the Aussie, but is this a market that's going to trap the shorts? I mean, are we going to get a squeeze higher above 4,100 in the S&P? What do you think is going to happen here?
I think if we get a beat on retail sales, your 4,100's toast. I think it'll be a good bounce. Whether it holds is automatic, but.
And that's really the question right now. I mean, I was telling the story. I don't know if it was here. I can't remember if, because we do a lot of different shows. You guys only are listening to the F.A.C.E show, but we have like the daily roundup. We got the morning edge. We got Ryan's got the flow show overnight. There's a lot of different shows,
man.
What's that?
We have a network.
It is like a network. It is a network. Pretty much. But I was talking to everybody yesterday, and I believe it was on the Morning Edge, and I don't fill up my car all that often. I have one of our vehicles is 5 or 6 years old, and I've literally put 20,000 miles on it over that time. It just doesn't really get driven all that much because we use like the family vehicle all the time. Anyway, I went to go fill up the vehicle, and it was like $100 to fill it up. And now a lot of you guys or gals are going to be like, well, that was nothing. Where I live, it's way more expensive. But as an American, that's a pretty. Oh, I just paid $65 the last time I filled it up, maybe 3 months ago. So that just kind of shows you the price jump that I experienced, and I was like, man, that was quite a shock. The reason why I'm telling you this story is because I'm sitting here as a consumer, and I noticed that big jump. How about people that have to fill up their car every, once a week, once every other week? Does it eat into their, into their expendable cash? And we are going to have retail sales today. It is going to matter. I think we are at an inflection point in the consumer where the consumer is feeling the pressures of costs, food, energy. I know Stelios he was telling us privately how expensive the energy costs are there in Greece. Steve, what's going on with the energy costs there in Europe?
Oh yeah, it's really bad, and I mean we get some bills because the system here is that you pay in advance for a few months, and then every few months they readjust. They readjust. They actually measure the actual consumption because the previous bills are like speculating what you consume based on past consumption and past prices. So during the past few months, we started getting some clearing bills that were like 600-700 euros for a period of 3 months added to what we had paid in advance, right?
Right.
Yeah.
So this is, I mean, all of this is all a culmination in just squeezing the consumer. Then you got like ECB's not overnight, talking about a half a basis point hike. I mean, and this, now I'm going to shift gears just a little bit here because we have 15 minutes before the data comes out. But, when you're talking about the euro, I know Ryan, Steve, Stelios, he's not here to defend himself, but he talked about, one of his, favorite trades of 2022 would be the euro outperforming everything as the ECB plays catch up to other central banks. Are we at that point right now? What do you guys think? I mean, because the euro's had obviously a really, really big reversal, but let's not forget that the euro has been hitting, new 52-week lows. We are challenging the lows from 2017, January 2017, right here. We're holding them now.
The 20-year lows, by the way.
Well, I'm sorry. Yeah, 20-year lows.
Which are also 20-year lows.
Yeah, and then also, this is the euro since the creation of the euro, right around here.
Oh, it's birthday.
See, we've broken down. So what do you guys think? I mean, is this the point where the euro just comes out of its shoes and starts to rally aggressively, or does the euro see parity? Because there's a lot of parity calls out there.
Well, let's take it in a bit of context. You can't take today as just an indication that it's turning around.
This is it, right?
But okay. You look at the evidence. You can find far more reasons why it's not going to go down anymore than you can why it should. ECB.
But wait. But you said it can't go down anymore. But how about the whole Russia EU like?
I'm saying there's more reasons why it shouldn't go down than there were before, and those reasons are, it's like taking bricks from a pile. You put it on one side, your positives and your negatives. The negatives are all stacked up. That's the reason why we went down this far in the first place. Fed expectations, Fed hawkishness drove the dollar. Russia, Ukraine drove the euro lower. But there's a shift now. There's a shift now. You've got all these ECB members coming out. June, there's going to be a decision. July, there's going to be action. You've got ECB not touting 50 pip hikes now. You've got the Fed. We know what's coming from the Fed. There's unless we get super smashing data out of the US, ball busting data, the Fed aren't really going to turn more hawkish than they already are. And they're going to get to a point with rates and they're going to pause and they're going to wait and have a look at stuff. The market knows this. So all the reasons why you sell the euro is now just starting to shift away from the negative. And if it ain't going to go down, there's only one other way it can go, and that's up. And it's going up. Does it mean we're going to see 112, 115 in the next 2 to 3 months? Well, the data will tell us that. And the ECB will tell us that in how hawkish or not a hike will be. And if it's a dovish hike, you're not going to see it ripping higher. You're maybe going to see it find a little range, maybe 108, 110, somewhere around there.
And maybe we can approach it from a different point of view, Ryan and team. I mean, you look at the euro on a weekly basis. And let's just take this into account, right? So what you got here is basically 7 years worth of data, right? You got 7 years worth of data. We're at the lower end of its range in a 7-year span. Upper end of its range is in the 120s. We're at the 103 to 105 level. I mean, from a risk reward perspective, it's like, if you get long here or somewhere around here, whether it's 105.30 where we're currently at, or maybe a dip back below 105, realistically, your risk is below 103.
Yeah.
Right.
Yeah.
I mean, and from a longer term perspective, now it is going to cost you some money trying to carry a position like that, longer term. But, just from a technical perspective, we are at the lower end of a range. So if you do believe,
to play the devil's advocate, Blake, I agree with 100% with everything that Ryan said. And I actually wrote in the weekend analysis that we're testing the 20-year lows. And, if we hold here, fine. If we break through it, I don't see any real support until parity. And this is the first time in many, many years that I say the word parity, having to do with the Euro USD. Every time we were going lower, I said, we're not getting to parity. But, 1-2 days of a rebound don't make a trend change. That's what I want to remind everybody, right? So, yes, the evidence started increasing that we might be getting closer and closer to a Euro turn. But in my opinion, it's still quite early. So people that want to fade this move, they need to be cognizant of the fact that for the time being, they're just fighting a trend, right? As long as they're okay with that, I agree with everything else.
Yeah.
Caveat, Blake, on your 4-hour debt chart, I see 2 drives. It doesn't always take 3, but I only see 2.
On this big weekly chart?
No, on your 4-hour.
Oh, on the 4-hour. Okay, so you know, here we are. So we got which one right here? 1, 2.
Yeah.
Okay. And you know, we're up against channel resistance right now, and I actually shorted the euro this morning about 10 pips ago. If you guys don't know, like, this is the ForexAnalytix chat room. You know, if you go into the trades room, you can see, you know, sold some euro at channel resistance. You know, I am selling into this rally right now, but I'm curious, you know, if we do get above 106, this is going to be a big level of resistance for the euro, but that's also that previous support at 106.30. It is the post-COVID lockdown lows. So just understand how significant that resistance is moving forward. But we're gonna, you know, like I said, we're gonna head into retail sales. On the other hand, and Ryan, I don't agree with you. Well, let me take that back. You didn't say that retail sales were going to beat. You said if they beat. I actually think retail sales are going to be pressured today, a little bit. So
that's going to be a very signal if you're right, Blake, by the way, right? Because we talked that in advance. When it comes to the point that retail sales, which are not inflation adjusted, are going to go lower, you know, because at the same time, we know that people have to spend more money to buy the same amount of products, right? So when we get to the point that people actually spend less money, which we know get them a lot less products, I think that's going to be an extra nail in the coffin of any possible chance to escape recession. Yes.
Yeah.
So we'll have stagflation.
We're all,
signs.
So again, you put that in the context of trading a number today. Okay, so you've got one scenario where retail sales beat and the dollar rises. Now, for something like the euro, it's rising into an intraday trend of a move higher. So you've got to think that dip is going to be bought. If euro dollar falls on a good sales retail number, that dip is going to be bought.
Yeah.
Conversely, if it's a worse number, we'll probably be trading 106 shortly after. So
we could
to be long euro than short and in and around this number right just today.
Well, the question would be, you know, how does the dollar react in this situation? I mean, is the dollar going to be an, you know, asymmetric move based on the data, or is it going to act like a risk on risk off proxy? Because, you know, if the data is bad, stocks are going to get whacked. Right. I mean, I'm just making that assumption. You know, the data is bad. You know, people are going to go, they're going to start coming to a conclusion Steve just mapped out. And, you know, is that a dollar bullish scenario? Because we've seen the dollar act as a risk off, you know, hedge, if you will, you know, as a safe haven type of trade. So is that going to, what's that?
Today it's all about the dollar, the Fed, you know, and their rate path.
Yeah. Okay. So today is different.
Yeah.
Yeah.
The data's growing in importance right now. You know, retail sales, you know, 3-6 months ago, you know, wouldn't move 15 pips perhaps, but now it's all about, is the Fed going to crunch the economy?
So and what you're saying is data matters
much more at the moment. Yeah.
Yeah. And, you know, that's the point that we've been trying to make here over the last month, really, is data actually matters to the market now. You know, for the longest time, for the last 6 months, it's been all about rates. Now it's all about how this is where the rubber meets the road, right? This is where the consumer, the economy is really starting to feel the effects of inflation, rate hikes, and the culmination of everything above that. So now the data matters more than anything because it's going to tell us the future, hopefully help us identify what the future trajectory of rates will be. Speaking of which, I was just looking at crude oil. Is a news headline just come out? Because let's take a look at crude really quick. It just got absolutely raked over the coals here. It was rallying. Oh no, we just hit the 618 retracement. I'm sorry. That's all that happened. Okay. So it was just, and then all of a sudden the bottom just started falling out of it. This is some pretty key resistance for crude oil. Speaking of crude, this is one thing that I want you guys to note as far as my feelings on crude. I think we are at a very big inflection point with crude. Crude has been one of those, crude rallies, stocks like it. Everybody's like, yippee. But I think crude is at an inflection point where if it goes up from current levels much more, stocks are not going to like it. And I do believe if actually crude came down and we broke back below 93, where really key support is, we break through that 93 bucks. I think actually stocks would enjoy that, believe it or not. So anyway, just little heads up, crude's right up against some pretty key resistance as it is. So let me ask you guys, what else is on your radar today before we head into retail sales? We got retail sales in 5 minutes. Anything else that's on your mind you need to talk about really quick? Ryan, anything that happened over the Flow Show? By the way, if you guys are not listening to the Flow Show, which happens at, what time is it, Ryan?
10:30 UK time, 9:30 GMT.
All right. So where you see the Flow Show right here, it is at 9:30 GMT, 5:30 a.m. Eastern for you East Coast folks. If you guys get up really early, it's got live analysis from Ryan. Kman is jumping in. Stelios is going to be on tomorrow after he comes from his catamaraning around the GNC. And what?
Tanned.
Tanned. Yeah, come back bald and tan, still bald but more tan. So make sure you guys jump in the Flow Show. It's a free show hosted by Ryan. Yeah, but anyway, Ryan, anything that happened that you want to mention?
Nothing really. We tend to go over a lot of the news that comes out in Asia. Like we had with the RBA. 40 pips in the minutes they were discussing a 40 pip hike when they went for 25. So, again, that's another boom for the Aussie dollar, things like that. Looking into the UK, the jobs numbers, high wage numbers, but you've got to look in the details. There's some skew in there from the furlough scheme.
Because that's why the sterling ripped, right?
Yeah, exactly. So there's a few reasons. We had some M&A talk, UAE telecoms company buying a 3.3 billion stake in Vodafone. That news was actually coming out Friday, but we seem to be this morning seeing some of that flow going in, perhaps, because basically on the hour, every hour from about 7-8 o'clock, sterling got bought. So that's an indication that we might see some M&A flows there.
Nice. Speaking of which, hey, you guys keep talking a little bit. I'm going to do a little bit of position squaring here ahead of the data. So continue on, please.
Yeah, no worries, mate.
Anybody?
Hello.
I know you guys still here.
Yeah.
I'm here also.
Yeah.
Good. You guys have to do a little talking because I'm going to do position squaring. So just bear with me.
Okay. You go square off. Okay. I'm looking at just for the boys and girls. I'm looking at dollar yen. If we get a good retails number for potential fade, if we get up towards that 130 zone, maybe a bit higher. I'm already long euro dollar. I had to scratch an itch yesterday to be long some, so I bought a little bit just to get over the FOMO 104.29. So I'm sitting in that, taking some profit. Let's see where that goes. I might add back on a dip again if we get a strong number. If we get a weak number out the US, I'm hopefully going to be knocking some out at 106. So if you're trading the data, let it be your guide. Position, know your levels. 105 is going to be potentially important again. Keep an eye on that, and let's see what we go. We've got about 50 seconds to go, so I'm going to.
Speaking of 50 seconds,
holy cow. Less than a minute. The forecast is for 0.8% increase month on month, with the previous number being 0.5.
Yeah, the flash.
Yeah, exactly. So let's see what we get.
And one of the things that you guys have at ForexAnalytix is you have this the data flash, which we're going to put up. Oh, I didn't want to do that. I didn't want to minimize that. We're going to move that over. Let's pull up the charts. Let's see what the reaction. And I've got 15-minute charts in the euro dollar and the S&P right here, so you guys can see. Basically, as the detail or the data comes out, we have approximately 10 seconds. All right. And yeah, heads up, everybody. Let's see. What do we get?
Nothing yet.
Hey, it's not bad data. Wow.
Good on the
4.6.
Coming in at 1% as well. So retail sales month on month.
Stocks are under a little bit of pressure.
Control better.
1.4.
It's a little better. Yeah. I mean, what do you make of that? I mean,
because Bullard said it 15, 20 minutes ago, consumers still going well.
Well,
one thing you can't do.
Consumer would be going well, Kman, if the increase in retail sales, which is more or less in parity with the increase in prices, was not fueled by a vertical increase in credit. So personally, I believe the consumer is not doing good at all because they're catching up.
Bullard came out and said literally 16 minutes ago, household consumption is expected to hold up through the year, and he's saying that 16 minutes for retail sales. That
was a total. Let's take care of my buddies.
I'm not discussing anything, Steve, about inflation adjusted or whatever. I'm just talking about the actual number versus what Bullard said quarter of an hour ago.
Well,
are you implying he knew?
Yes.
We would never say something like that.
That's exactly what he just said.
Oh, okay.
That is exactly what he just said in 0 words.
The best for that used to be De Guindos when he was Spanish economy minister. He used to come out a day or half a day before important Spanish data and say, "Oh well, there's a good chance data might be good tomorrow," and bang, it would come out.
Yeah,
so, yeah, they're all at it. They're all at it.
Hey guys, look, I gotta say this. If you guys haven't checked out the Trader Funding Program, this is our sponsor. Make sure you check it out. If you want to learn how to access larger amounts of money with just an assessment fee, a small assessment fee, we have people that are qualifying for live trading accounts every week now. It's pretty awesome. You keep 75% of the profits. You take 0 losses once you do get into a live account environment. If you want an explainer about it, just go to the very bottom.
There's a pretty boy down there.
Yeah, there's the little pretty boy here next to Boba Fett. But the point is that if you jump in the Trader Funding Program, you're part of the ForexAnalytix community. So you get to jump in, our chat rooms. You get to go into the trade rooms. You get to go into the Flowonomics room, which is the macro chat room, into our general chat room, and just have trading ideas. So you're not just kind of fumbling around trying to figure out what you want to do. You actually have an idea of, different trade ideas to actually, to execute on. And that's the benefit of having a community while going through, some sort of, assessment period. So make sure you check out the Trader Funding Program. I want to thank the entire team for being here. Make sure you guys get signed up for the Flow show, which is obviously in the middle of the night while I'm sleeping. But for you guys and gals, I think it's a great opportunity for you. So thanks, everybody.
All right. Thank you, team. Thanks for laying it out on the court again every day. Francis, welcome to F.A.C.E. I'm really looking forward to being able to talk to you. How are you?
Very good, yourself.
All right. So, Francis, I don't know if you want to share your screen. If you do, there's a green button at the bottom.
Yeah,
if you just move. Okay. So, I first saw you when stockcharts.com was not famous. It was kind of a fairly new website, and they had rankings of people. Still waiting to see your screen. It's that green box at the bottom. Here we go. And, I saw, what the things that you were talking about. So I have to ask you, what came first, Francis, for you? The planets or the markets?
Well, I got into the markets in year 2000 at the top. Everybody convinced me to jump in, and I jumped in.
Are you
and went,
still friends with them?
Yeah, I am. Actually,
Oh,
I
that's
am.
great. Okay, I was just checking.
I am. I jumped in. I bought Microsoft.
Okay, yeah.
I'm a
It
programmer.
was a safe stock.
I'm a programmer. Yeah, but except
Yeah.
I lost 15% in 1 month.
Yeah,
So
I know.
So I realized. Then I learned about bear markets really quick, and made $50,000 the next month.
Okay.
So then everybody was talking that it was going to be a repeat of 1929, and that we were going to go down 90%, and it got caught up into that thing, and basically lost all my profits I made on the way down. I lost on all the way back up, and then made a whole bunch of it back in 2008.
Yeah.
And then by that time I got actually quite good. I actually nailed the March 6th, 2009 bottom to the day.
That was an important one. And that was, so were you using the planets after Microsoft, where you started looking at things that a lot of people...
I learned everything I could about the markets, and I read some old books, and
like
they
what?
they talk, I forget what the title was, but it was it gave they talked about GAN, and it talked about astrology, and it talked about, and then I realized that then I got into like university studies, which let me see, God, it's how do I move the top bar?
What, to a new share?
No, you're it's the top bar is in top of. Okay, I'm gonna make this smaller. I'm gonna make my screen smaller.
Okay. And then can't
just
lift it. Huh?
I
can't do anything with it because you're in control of the TV. Okay,
right.
there. I'm not sure what that box is there, but okay.
So for example, I found out that this was university studies that showed that basically the moon affects returns quite a lot. Okay. And so that I started to study about the moon, and then the same thing happens with the seasonal cycle, where all the gains are between November to May, and the rest of the year is basically flat. And that's a sun cycle. Okay. And now people,
I didn't know that. So sell in May and go away is a sun cycle.
It's a sun cycle because basically we all know how the sun affects us. When it's nice and warm in the summer, everybody feels good, and they sort of relax, and they're not into work mode.
Not in the desert.
It's of course it's different in the planet, in different places. Okay. There's also the location has to do with astrology, but the thing is that there is a moon cycle, there is a sun cycle, and then I got into some more stuff, like into longer cycles. But so I realize if the moon affects us and the sun affects us, everybody knows that when it's sunny, everybody's happy. When it's rainy, nobody is.
People get depressed.
That's right.
In
that's
Seattle.
Right. So there is. That's why the fall is where most market declines are, because it's not called the fall for nothing. It's the fall of the lease, and it's the fall of depression. It's the fall of mentality. Okay.
Different meanings,
there's different meanings. So you can see that this is what happened. Now, then when I got into more, then I started to look at all the planets to find out which ones had the most effect. And that's when I came upon Venus, because I noticed the October 10th low in 2002 was the exact day that Venus turned retrograde. Okay. So I said, I took note of it. And then on March 6th, as we were dropping in 2008, I knew that March 6th was going to be a Venus retrograde period. Okay.
Yeah. So you're preparing for it because you know the layout
well,
months ahead of time.
I was suspecting that it could be a low because of the previous one was a match to the day. And sure enough, on March 6, 2009, it was an exact match to the day. And I called it. I remember I was on a chat board at the time, and I said, this low on March 6, 2009 will be like the low on October 10th, which sent us back to test the highs again in 2007.
Right.
In 2007, we tested the highs of 2000.
Right.
Okay, so I expected to go and test the highs of 2007, right. and I stayed long all the way through there. Okay, then I went short here, and I was wrong. I was totally wrong. And then we got into the thing. Then I realized what had happened. Okay, because I got into some more. Let me find the chart here.
So before you go to another chart, I see you have a low coming in July of 2020,
July
23.
Yeah, July 22nd, 2023 is very high likely to be the low of this bear market.
Okay. All right. So, it's interesting what cycle it is, because I know someone who follows an epic cycle that has, some type of low there. And do you know Chris Carolyn?
Yes,
Spiral calendar.
Carolyn very well. I know.
Okay. Well, Chris is looking for something around there too. He was on a few weeks ago before the solar eclipse. So, interesting that, and you probably all you guys came up with it using different methods, and you're all pointing towards the same time zone. So,
that's right.
I know I'll be paying attention to that period if I can remember it.
Look in 2000, the Venus turned retrograde in July 29, 1999, which was not the high, but it was a high. And it turned retrograde on March 8, 2001, which was like 4 days from a major low. Okay.
Yeah.
And then in 2007, it was September 8th, which was 1 month before the October 11th high. But look at how this year, Venus retrograde was on December 19th, 2021, which was like really 2 weeks. On a monthly chart, it's exact. Okay.
Yeah.
So
you think down from here, would you eliminate there is a minority out there that thinks that this still, in Elliott terms, could be a 4, this pullback, and we could have one more high.
I'll show you why that is impossible. I'll show you why that is impossible.
Okay. I never knew anything was impossible.
Because, I'll show you some evidence.
Not probable, I'll go with, but impossible.
Highly improbable. Highly improbable. Because, as you know, in the markets, nothing's impossible.
Right. Right.
That is true. Now, the fact is that because it was so exact on December 19th, it raises my confidence a lot that July 22nd, 2023 will be the low. Okay.
Yeah.
Of this first leg of this big market. Okay. This first bear market is one of the many bear markets. I'll get to the next chart and explain to you why. Now, here's the 1929 thing. In 2000, people thought this was going to be 1929.
Right.
Okay. But it was not.
Yeah.
It was not.
Yeah.
Look at the bubble here in the tech bubble high.
Yeah.
Now this, we don't have data. I don't have up and down NASDAQ, up and down volume for going back to 1929 because there wasn't
no NASDAQ. No NASDAQ.
That's right. It wasn't counted back then. So I cannot compare. But I do know that the tech bubble high here, the high of this indicator, was on February 16, 2021, which was the exact day that the ARK Innovation ETF made its all-time high.
Interesting. God, she's everywhere.
So it signaled right there that the run was over. The bubble had peaked. It took a full year before the actual price peaked. And
before the Fed popped the bubble.
No, it would have popped anyway. The Fed is powerless.
Okay, I can agree with that. Bond vigilantes pop the bubble.
It just happens, okay?
Mm-hmm.
Now here's the normally the bubble, I knew it was broken when it hit this date here. Let me see. The exact date was on 13th of January 2022.
Okay.
I called the bear market on January 22.
That's when the averages started. That's when the averages started reflecting what was happening in the broader market.
That's right. But once it got back into normal market behavior, I knew the bubble was over.
Yeah.
And it was guaranteed. So I called the bear market in January 13, 2022. I was one of the earliest ones to call it. Okay.
Okay.
And then that's only part of the stories, because I have another clue that let me just find it.
The dollar or gold or
no, I'll get back to the dollar later. I just want to show you. Okay, no, it's on another list. Is it here? No, it's not here. Let me find it. Where is that damn chart? Okay. Some charts have the timing is too long.
As a trader, you learn to be patient, especially for insights from other people, as well as you being compelled to do something. So,
bubble. There you go. Here's another thing that I found out, actually from the 1930s. One guy was plotting sunspot cycles with the manufacturing activity in the United States.
Wheeler
found a correlation.
Was that Richard Wheeler?
I don't remember his name.
Yeah. Okay.
But then I started to look at bubbles that I passed. Okay, the first bubble that everybody remembers, the January 1980 bubble high in gold. Okay.
Yes. Yeah.
And the solo low was 1976. 41 months later was the bubble.
Yeah.
Okay. Gold pulled back 82%.
Right.
Okay. Then the Nikkei bubble came in December 1989, which was 34 months after the solar low of 1987. And the Nikkei also pulled 82%. Okay.
Okay. Yep.
Now there was another bubble in 2011, which was, it's actually oil. Okay.
Okay.
Oil and gold. Okay. Was in 2011. Okay. It's obviously not gold, because it has not pulled back 82%. It's actually near the highs right now.
Yeah.
Okay. So it was
the bubble hasn't happened in gold yet then.
No,
the next
another bubble. there's another bubble coming in gold. Okay,
That's what I
but
thought.
so
Okay.
the oil bubble was in 2011. The oil
Went to
the
140.
oil bubble went
Yeah.
to 147. Okay.
Okay.
Okay, and oil pulled back actually more than 82%. It went down to $6.
Yeah.
So it went down like 92%. Okay.
Right.
So that was 26 months after the solar low of 2009. Now we have the solar low in 2019. And we have a bubble here. Okay. Now
Yeah.
my guess is the bubble is the NASDAQ or the SPX. Okay.
Yes.
And it's 12 months after the solar low. So they keep getting shorter. It was 41 months, 34 months, 27 months, 26 months, and 12 months. You can see that there's
Compression of time. Why?
a compression of time. Okay. And you can also see with the red line with the bonds.
Yeah.
Now bonds broke this
They broke
30
everything.
year
Yeah.
30-year trend line. I mean, this
Right.
is serious.
It
This
is.
is because now you will have deflation. Now, and I know everybody's talking about inflation. Inflation is heading up right now, but that's only the last gasp before you get the deflation that will come, the 1929 type deflation. Okay. As bonds and stocks come down, money will be destroyed. Okay.
Right.
Assets will be destroyed and the demand will be destroyed and the economy will go into a global depression. And the target for the SPX 82% drop is 850.
Okay. Yeah.
Now,
So
850 will not happen by 2023. I can guarantee you that. Okay. So there will be a multiple bear markets into the next decades to take us down to this level. Okay.
okay.
Now, let me find another chart here.
Really interesting stuff, Francis. Really.
Well, this is long-term stuff.
Yeah.
Okay. We'll get into the shorter-term stuff.
Okay.
But
We have
just-
about 10 minutes.
Okay. So let's just
I'm not trying to rush you. I'm just giving you an idea.
yeah.
So where do you hide? In cash? And what kind of cash? Is it the dollar?
Yes, in commodities currencies. That's where
commodity currency, Aussie and Canadian.
that's right. Mostly Canadian because Aussie is weaker than it should be.
Okay. Not the euro.
No, not the euro, but as the war in Ukraine winds down, which it will eventually, here's the chart.
Okay.
No, that's not it.
You don't grant many interviews, do you?
No, I don't. It's my first one. Okay,
Yeah.
here's the chart from looking back because I went back just to talking about planets. I went back to 1637 tulip bubble and found that there's a relationship between bubbles and Uranus. Okay.
All right,
And
we're still
Uranus-
seeing the S&P chart here.
Yeah, that's the S&P chart.
Okay.
Now you can see the 1720s, you had a rise of 40 times. Okay. And it took 70 years to get out of that slump once it crashed.
Yeah.
In 1836, you had eight times, and it took 52 years to get out of to make a new high. Okay. In 1929, it went up 40 times, which was it's like 1720. Okay. And it took 25 years to make a new high. Now we've gone like the Dow has gone like 60, 80 times. Okay.
Right.
So this bubble dwarfs all bubbles since the last 300 years. Okay. And all of them have peaked. The average is 97 years. Okay. but most of them is like 93 years. That's why I predicted that 1929 to 2022 is 93 years, just like 1836 to 1929 was 93 years. It's another fact that we are in a serious bubble, and we're looking at a 1929 global depression. Now, because the last one was sharp, you can see that the 1720 was sharp. In the Elliott wave, there's that rule of alternation. It's sharp followed by complex. You have a sharp drop, a complex drop, ABC. Sharp drop. Here now, we're not going to get a sharp drop. We're going to get an A, B, C, D, E, or whatever you, okay? So it's going to be a complex correction. We're not going to just going to go down.
It's not going to be it's not going to be a heart attack. It's going to be cancer.
Exactly.
You like that metaphor?
Over multi-decade, because the global
with
economy,
chemo and radiation and surgery and
that's
everything.
right. That's right.
Okay.
And now we get into what's my plan for the
yeah, how
coming years.
Are you going to move your residence to be in this world? It's going to be tough out there, not just financially.
Well,
right?
I live in Canada, so
oh, okay. You're already
I'm already in the right place. But
you do rent rooms for other technicians?
No, there will be good times. It's just right now we're heading for 2023, 2024, probably a double bottom, 2023 and 2024. Yeah, and I'll show you why. Where is it? No.
Where will Bitcoin be in the midst of the depression?
Well, Bitcoin relies on the internet. Okay.
Okay.
And
so it'll be cheap.
In 1856, there was a solar flare that knocked it's called the Carrington event. Okay.
Yeah.
And it knocked away power grids. It burned people on the telegram. It was, if that solar flare happens again, it will kill the internet for 3 months.
Wow.
Now, it's not a question of if it will happen, it's a question of when will it happen. Now, if when it does happen, all cryptocurrencies which rely on computers and internet will become null and void for 3 months.
Okay, just null and void.
Null and void for 3 months, which that will be a serious thing. But for now, crypto is on the, I have it here. It's it's on a 4-year cycle. Okay.
Yeah.
And it's been 4-year low to low, 4-year low to low. The next 4-year low is in late 2022.
Okay.
And the 4-year high was in late 2021, which it actually was the all-time high.
So we have another 3 years down.
No, another year. Next 4-year low is in late 2022.
Okay.
At the end of this year. But mind you, it can drop a lot in 1 year. Okay, it has dropped like 80% in many times. Okay.
What if it's not a solar flare, Francis, and it's a hack out of Putin? I mean, I heard stories that those transatlantic cables, that before he invaded, that he made a few cuts in them with a submarine, and he could disable that. That would take the internet down. It wouldn't have to be a flare, unless you're expecting a flare. Maybe you could use that as a cover story.
Well, the flare will happen one of these days. Now, here's the chart what I wanted you to show you.
Okay.
Now, here's the next. This chart has 7-year highs. Okay. Yeah. Now, the 7-year high is well known by Jonathan Kahn because he called it the Shemitah cycle. Okay.
Right. Shemitah.
Yeah, it's all about prime numbers. The only numbers that matter in the universe are prime numbers. All the other numbers are cycles or multiple of prime numbers.
What's a number 3?
The prime numbers are 1, 2, 3, 5, 7, 11, 13, 17, 19, 23, and so on and so on.
Because I see a lot of 3-drive formations. I trade them.
Yes.
Okay. That was J.R. Hill. I learned that from.
I like people. Often you will have moves of 3.
Yeah.
Okay. That's the most common move is 3. 3 and 5 are the most common moves.
Right. That's Elliott.
So that's why that's where Elliott wave gets its theory. But they're not the only ones.
Right.
7 and 9 are also happens. Okay.
Yeah.
But if you look here, you can see it all the thing. It's 1, 2, 3.
Right.
And here it's 1, 2, 3, 4, 5.
Right.
1, 2, 3, 4, 5. And then 1, 2, 3, 4, 5.
Yeah, completely.
And then top. So now we're heading down into the next 4-year low is 2023 to 2024. And the next 4-year high is 2028. There's going to be a huge rally starting in 2024, going into a 2028 high. So there's going to be a 4-year bull market following this bear market that's going to end in 2024.
So is a depression like a 1-year, 2-year depression if we're going to make new highs in 2028?
We're not going to
make compressed in time too?
It's going to be a lower high.
Okay. All right.
Okay. So we're going to drop. We're going to have a really good bull market for 4 years. That's not going to make a new high. And then you will get the huge drop, which will take us into depression.
Okay. Just a quick comment on gold and kind of like your plan for the next year or so into the lows that you see coming in the markets, and what's going to happen, as far as a depression. Are people going to have to be flexible, or can they just sit on precious metals and have their food for
precious metals gold is where to be. Okay. For a couple of reasons. Let me see. I'll show you. Here's Bitcoin breaking support. So it's not good. Okay. Let me see.
So how many times did I have to invite you until you relented and decided to come on?
Well, just once. You asked me twice.
Oh, okay. I'll see how persistent. I'm not afraid of no.
Okay. Well, no, I didn't say no. I just said the timing was off.
All right. Okay.
But the gold is the thing is that you have this huge cup and handle, which is a well-known formation.
Yeah.
Now the breakout is above 1920.
Yeah.
We did attempt to break out a couple times. Okay.
Yeah.
Not quite. Okay.
Yeah.
But normally when rates rise, gold drops. Okay.
Right.
But not always.
Not this
when
time.
Rates rose into 2028, 2026, gold rallied like hell into 2026. And lately, rates have risen an awful lot, and gold is holding still, which is a sign that it's a sign of strength. It's hidden strength.
Yes.
That's where I want to be in gold.
Okay.
Now, we're talking about oil. You were talking about oil recently. Here. Now, oil is another Elliott wave classic case, okay? Where you have wave 1, wave 2, wave 3, and wave 3 was an extended wave with 1, 2, 3, 4, 5, okay?
Yeah.
And now you have this huge bullish flag, okay?
Yeah.
I mean, everybody knows this is a bullish flag, and we broke out of it. Until oil goes back down below 80, this is a monthly chart, okay? So until oil would need to break a monthly low below 80 to invalidate this thing. Otherwise, let me tell you, oil is heading for $150, $200 a barrel.
Okay. That's
Okay.
Yep. See that
That's
possibility.
That's that possibility.
And the dollar, could we wrap
The
it with that?
the dollar is another that I'm watching very carefully, because the dollar has been acting. The dollar has been on its 17-year cycle. Here's another prime. Okay.
Yeah. Yeah.
Now, if you notice in 1987 or 1985, well, actually, let me just so I can get the exact dates. Is 1985. You could see it went to 164. It was huge.
Yes.
Then 17 years later, in 2001, it went to 116. And now it's heading up again, and it's past. It's really doing a triple top near the 17-year cycle.
Okay.
And
we're
it's
in
much
that window.
lower. It's much lower than thing. The thing is that as the bear market started in the 2000, people flocked to the U.S. market because the U.S. market always does better than the other markets.
Best
which
clean,
causes
dirty
the
shirt,
US,
and yeah.
It's a safety flight. That's why the dollar is so strong.
Okay.
But the minute the U.S. market starts to tank, people will pull their money out of the U.S. market, and you will get the dollar coming down. Okay.
Okay.
And then my guess is this triple top here, I would definitely not be bullish anything. I mean, the dollar is making its high, and it's 103.82, 103.96, and now it's grinding.
Yeah, I have it back under 102.30. It would negate this recent little breakout it's had.
That's right. And
you know what, Francis?
It was very oversold here, less oversold here, and even less oversold here. So it's due to the head down.
Okay. Really great interview. It's so much insight.
One last chart.
Oh, okay, sure.
Because let's talk short term, okay?
Okay.
Because I said I've been watching. No, hold on a second. Okay, the moon rules emotions. Now, in a strong bull market, moons are not that good, because the emotions are already happy and so on and so on. But when people get scared, like now,
like the eclipse we had,
you could see that every single moon marks a high or a low. Okay.
Yeah.
And I'd been forecasted that this was going to be a low. Okay. For the eclipse of
sun
that we just had this weekend. Okay.
Right. Oh,
now we're heading up into the May 30th, the end of May, 27th of May.
That's my birthday, the new moon.
Okay, and we're going to go at least a 4,300 and possibly higher.
Okay.
Okay. And it's not going to stop on May 27th, because the first 3 days of every month is usually bullish.
Yeah.
So my guess is it will keep going high up until June 3rd. So that's my guess. You will see the SPX
bear market rally into June 3rd.
Into the end of late May, early June.
Okay. So I hope you enjoyed sharing your insightful work. I know you put years into it, and I'm getting all kinds of comments. Bring Francis back again, first and only interview to rule them all. Okay, so the viewers liked you. If they want to follow your work, where's the best place for them to? Twitter. Okay, and that's at astro_cycle.
It's it's astrocycle_net.
Okay, astrocycle_net. Okay,
no dot.
No dot. Okay.
My Twitter handle is here. Astrocycle _
Yeah,
net.
that's what I was. Yeah, astrocycle _ net. Okay. Oh, just
There's no
net.
dot. There's no dot.
Oh, dot.
Because they don't allow dots in Twitter handles.
Okay.
I replace a dot with an underscore.
You're now my trading warrior brother, and we're both veterans. So we've seen a few battles, haven't we, Francis?
Oh, I've been at this for 22 years, getting quite good at it now.
Okay. And I want to thank your giving spirit for sharing it with us today on the first interview you've granted. And I'm glad you chose to do it with me. It's an honor.
Thank you.
Thank you very much.
Have a great day.
All right, everyone. Francis, let me see if I got your last name right or I butcher it. Bouger?
No, Bussière.
Busson. Okay.
Bussière.
All right.
Like bus, like Bussière.
All right. And where can I buy a hat like that?
The hat?
Yeah.
I bought it in Chinatown.
All right, buddy. Great talking with you.
I live right next to Chinatown. My girlfriend is Asian, and I love the Chinese. It's nice people.
Yeah, it looks like you're on your way to the track or the casino or somewhere. But yeah, anyway, an understanding of the cosmos and how it relates to markets appreciated, Francis. Great interview.
Yeah, we could talk about some more of that stuff. There's a lot more than we haven't even covered.
We'll do it again.
All right.
All right. So that's a wrap, everyone. Everyone enjoyed Francis, and you could join the team in 4 minutes for the Morning Edge. Good hunting on Turnaround Tuesday, and Francis laid out a very interesting roadmap. And when it lines up with your work, do it. And I'll see everyone tomorrow. Remember, don't just count your pips or your planets or your cycles or your sunspots. Count your blessings and have a great trading day. Thanks again, Francis.
Okay, bye.